Welcome to the Future of Supply Chain, presented by Dynamo. Each episode, we sit down with leaders in the industry as we build the future of supply chain together. Let's get into the show. Here's our host, Santosh Sankar.
Hey, ladies and gents, welcome back to the Future of Supply Chain podcast. I'm your host, Santosh Sankar, and joining me today is my fellow partner, Barry Large. Welcome back, Barry.
Great to be here, Santosh. It feels like it's been a year or so since my first interviewing appearance.
It's probably been a bit longer than that. It might be 18, at least 18 months, if not a couple years. But given the time frame that has elapsed, would love for you to just give the people here the quick 2-minute overview of Access America and now kind of what you're doing at Dynamo.
Sure. So just out of college, two of my best friends and I, who are still together today, started a freight brokerage. This is in 2002. And we built that business over the course of the next 12 or so years. Really starting out as kind of a modest shop that moved some flatbed freight, building materials. And then over the next decade, diversified that business into every different type of sector, and at the end, we're dealing with a lot of Fortune 100 companies. Built it to be one of the largest private players in the country. It was a really awesome decade to start and build a freight brokerage. Just the timing and the life cycle of the whole industry feels like. And then that thing grew to be our last full year in operation. Did around $500 million in gross revenue. And we were at a point in our careers where we had begun dabbling in lots of stuff, not just Access America. We had started several businesses that were offshoots and were, in parallel to the freight brokerage model, but adjacent. And then we also were dabbling in early stage venture and found ourselves with our hands in several pies, but Access America was becoming a beast. It was 850 employees and was heading towards some needed change, whether that be an IPO or a merger or an acquisition, some sort of event. And we never really ran a process per se, but found a really good feeling strategic partner in Coyote that we felt that we ran our businesses very differently on the freight side, but our cultures were very much the same. And so decided to merge that business in around 12. The idea of this joint entity going public, it would go public a lot faster together than apart. We let quite a bit of our equity roll into that new venture. Allowed us to step aside as founders. And before that public offering ever came to fruition, UPS came in and purchased the entity in all cash. This is about 2014.
Yeah. So with that, you mentioned you founded, scaled, sold Access America over about a 12-year period. And I'd be curious for somebody who kind of had that exit event right prior to kind of this manic period around digital freight brokerage. What are the thoughts going through your head now, right? As you've kind of seen the collapse of Convoy last fall, and there's still kind of murmurs and rumors that, hey, like there's still a bit of bloodletting in the industry to happen.
Yeah. So, we started this business in our early 20s. We did not even understand or know what venture capital meant. It never was really an option for us because we didn't know that it, was an option available. And quite frankly, if you tried to get venture capital into this industry at that time, it wouldn't have happened anyway. But so we bootstrapped our business. We did it through bank debt and some guarantees early, but pretty quickly the exposure we had on our line of credit to fund our AR far outstripped any guarantees. So if it was to fail, everyone was cleaned out. But we grew it through our own cash flows in essence. and we grew it through our own EBITDA, and that was always a focus for us. Now we were, the business was never tech first. It was a sales beast that used technology to enable it and to optimize it. But, maybe the impression, because we were young and a little more innovative in our thought, was that we were some sort of amazing tech machine. We really weren't. We were an amazing culture. But when we sold, we were certainly aware of the amount of venture capital beginning to flood into the market. And we were aware of that we weren't necessarily on the cutting edge technology wise. And my view then, and it's still today, is that, there will be an erosion of margin in this industry, where classically, 12 to 16% is your take rate. And, technology enables that to be done for a lot less. Now, I think that if you look back in 2012, 2014, when the Uber freights were being funded to convoys, I think the idea was, and the fear was, it was coming much, much faster than it did. Yeah. And, this is a stubborn industry. And it's a complicated industry, and it's incredibly fragmented. And so it's just that margin erosion has happened. In fact, in a lot of ways, it's never happened. If you look now, margins still are in the teens. Now, again, a lot of these tech venture funded brokerages grabbed market share by slashing rates and slashing margin aggressively. But the kind of the supply demand levelized kind of margin at the industry level is still in that early, low teens. And so, and that's where we're at now. Where we're going, we can talk about as well.
Let's rewind back to last year, because you're on the board of Steam Logistics, who's a rapidly scaling freight brokerage business, part of the Dynamo portfolio. You're a meaningful investor there as well. What was 2023 like? Where were you leaning in? What were the certain actions that you were undertaking or encouraging management to ultimately think about?
Yeah. So, the last 2 to 3 years in this industry, I've been in it now since 2002, so we're over 20 years. When we owned Access, we weathered the 2008 Great Recession. We've seen some cycles. That post 2008 kind of bull market lasted a long, long time. But the ripsaw effect of coming out of COVID in this industry, I've never seen anything like it, to where rates and demand was so high for a couple of years, and getting freight, getting loads was so easy. It was like a drug to the industry, and it happened almost overnight. In the spring of 2020, there was a fear that we were entering into a freight apocalypse. And that was about a 3-week fear, quickly replaced by this absolute massive bubble. Yeah. And so it was hard not to be intoxicated by it in this industry. So this ripsaw effect in the industry led to this huge bubble. This is 2021 into 22. And, it created this massive surge in revenue, and it particularly benefited the freight brokerage industry as this middleman. Really, one of the things about a freight broker is there's a lot of businesses out there where you control your pricing. You may have a product or service, and you can go out there and set your prices. Well, freight brokerage is not one of those businesses.
Right.
It really moves with the macro trends, with supply and demand, and you can undercut. You can charge more, but really the movement of prices is not up to you. And so you had within seemingly months, when interest rates started rising, you had this just collapse of rates. And it started with ocean container, to where you had, these just hilarious inflated numbers, and then this rapid collapse back below pre-COVID levels. But then
It
it
looked like
followed also.
Bitcoin.
Yeah. Just, I mean, there's, if you would map it over the last 100 years of price trends, it would just stick out, I'm sure, like this anomaly. So it's just hard to operate in that environment. And ocean, is and was a big part of the steam story. But it's also affected, domestic and other aspects. Rates are just way down. And so you have an army of brokers out there doing the same amount of work to move a load. But, the gross profit collected on that load is maybe half of what it was. So,
Yeah.
And it happened so fast. And there was such a hiring explosion in the industry, and steam was a part of that. And all of a sudden, the paradigm had shifted. There was no, and still there's beginning to be green shoots of change, but an unknown end to these depressed rates. And so, what I tried to do as a board member was, I think one of the best gifts you can give as a board member is wisdom and experience, as you've seen been around and seen ebbs and flows, and is to try to keep our feet on the ground and anticipate changes that need to be made. And so the metric that steam tracks and runs its business off of, or the main metric, is gross profit per head. Gross profit, some brokers call it net revenue, but it's the amount you keep after you pay your carrier. And so it was, if you the main trigger in this business is, when do you hire new people, and how fast do you hire, and when do you hire, and we use gross profit per head. If it hits a certain threshold, then it could trigger starting to hire again. And so that gross profit per head had intentionally really lowered, so we could hire at a faster rate. And so, but just by moving that metric up, it was a governor in the business. And and so it was a move earlier, I think, than some, maybe, to raise that target. Whereas if we were hiring at 10,000 of gross profit per head, we're going to start hiring at 15,000.
Yeah.
And so that's the main. I mean, this business is not that complicated. You've got people and technology booking freight, and you've got people supporting that alongside it. And so when you make that change, your headcount is going to smoothen as you grow.
Is there anything, kind of as you look ahead to 2024 now, or still at the front end of this year, that you're paying attention to or are preparing for as you kind of look at steam and the business going forward?
Yeah, I mean, we are a part of the Dynamo portfolio, but we are not a classic venture company. Steam is not. It's taken some early kind of seed capital, but it's operating as if it never raises capital again. So it's not going to go on the B, C, D route. So that means it has to grow through its own cash flows. And so we've always valued EBITDA and optimized to EBITDA. But there's been times, and pre-correction in the ZERP environment, it was valuing top line. Maybe if you're weighing top line versus EBITDA, it's weighting it more towards top line. And so the last year has been optimizing EBITDA, and that will continue. And it's been a difficult year, because sometimes optimizing EBITDA is not fun.
Yep.
And so, but again, that gross profit per head has now risen to a healthy place to where it's now optimized as if and when the market comes back, which there's beginning again to see some green shoots of rates going up and capacity leaving the market to kind of get back into an equilibrium, that it's ready to be back in a really, really strong EBITDA positive position.
Stepping back now and kind of thinking about the industry as a whole, you're also part of the board at Sender as a part of our seed investment many years ago now. But you're able to see kind of the use of technology inside of these organizations. What's the role in your eyes that technology plays in something that's so service oriented? And I think it's fair to say a lot of people have learned is a lot harder to automate away than they had originally hypothesized.
Yeah, it is. The technology, the tools of technology enable the broker to book more freight in a day.
Productivity.
And the productivity, it's productivity. And it's if they have better tools. I mean, obviously the charisma and effort of a broker is still important and paramount. But if they have the data and the shortcuts and the suggestions of technology to book 9 loads instead of 3 loads in a day, charisma can only get you so far, and banging the phones. And so it is using technology and tools to squeeze out more loads per day. And that's been, I think, tougher than imagined from Silicon Valley's perspective as they begin investing in this. This is a unique industry, and data is not shared very readily. And you've got this long tail of trucking companies that are necessary to move freight, but you can't access their location and data as easily as some industries. And so it's been a challenge, but again, it's inevitable. And if I were to start a brokerage today, and the way I counsel Steam is you have to optimize your business to be able to run it profitably at single digit gross margins. We've talked about how slowly the margin erosion has occurred, but that doesn't mean it's going. It doesn't mean it's not going to happen.
Right.
And so I think if you can't operate profitably at a 4, 5, 6, 7% gross margin percentage, you're under real threat over the next decade or so. Now, I thought that too, also 10 years ago. And so, I've been proven wrong a bit, but I still hold on to that belief.
Is your belief perhaps emboldened as we've seen what something like GPT-4 can do? And we've certainly seen inside of other parts of our portfolio business models that are able to implement LLMs of various types and are kind of showing up with 50% gross margins. And is that something that you think is viable and perhaps a tailwind in this effort for brokerages living in a world of single digit gross margins?
Yeah, I mean, it feels tailor-made for this business, for this industry and this problem to solve. Now, I don't understand AI at the level that many do, and you got to get the right data and train it on the right data sets. And the thing about freight brokerage is so much of it is live data. It's so about where assets are right now. And so, a lot of what we see now in LLMs is trained on the last 5 years worth of I'm sure that's going to be a part of these models, but it's also about where trucks are now, or
Yeah.
and so you're going to have to still figure out ways for all this capacity to share that, but it's out there. It's inevitable. And so, yeah, I mean, I don't know over what time frame, but where LLMs are headed from my kind of lay perspective, it seems this is such a transactional business and so data driven. The right LLM suggesting the right loads and or booking it without a human, it seems inevitable. And obviously that's an incredibly deflationary technology. So yeah, in my mind, over the next 10 years, it will be the a huge contributor to the erosion of this margin into the single digits.
So to bring us home here for the entrepreneurs listening in our audience, brokerage aside, forwarding aside, when you think about the world of freight, are there any problems that stick out, or something when we started Dynamo nearly a decade ago you're thinking about that still feels unsolved, or just haven't seen enough of these people tackling?
I mean, nothing specific. I would just say, you see a lot more deals than I do, but I see a lot of stuff that makes it to me at the end. So, and I'm still amazed. If I'm talking to a couple hundred entrepreneurs a year with different novel solutions in different parts of the supply chain, there are thousands and thousands of problems to be solved. And I don't know particularly the right ones to go after, but if you are interested in this space and want to build a big business, it's figuring out a way to expose yourself to some part of this industry, and then you'll figure out the problems to be solved if you bathe yourself in it for some period of time. Almost every Dynamo company we invested in, had been exposed to some aspect of some part of the supply chain, and then some light bulb comes on. It's like, oh my gosh, this is so backwards. I can solve this. So I don't know the specific answers, but I know, pursue this industry is unsexy. And then it's become sexier since Dynamo started. It was really unsexy when we started it.
Like to think so.
Yeah, but go find the unsexy in the unsexy. It's an unsexy industry, and then go pursue the unsexy within this unsexy industry. And if you're in it in a year or two, in some capacity, whether it's working for a startup or working for a big corporate, chances are you're going to stumble upon a problem that needs to be solved, and it's not necessarily going to be the absolute solution for some entire segment. It's going to be tackle some specific small problem that can be a massive business if you do it right.
Love that. Well, Barry, it was great catching up, getting your thoughts. Somebody who has this historical perspective, if you would. But we'll see you tomorrow in the office.
Sounds good. Have a good day.
Cheers.
Thanks for watching. Follow us at dynamo.vc for all the latest episodes. We'll see you next time.